Hello, hello, hello. Welcome back to the Deep Dive. I am your host, the Handsome Trader.
Hey there.
I am bringing you the high energy, the good vibes, and hopefully the high returns on your time today. It is wonderful to have you here with us.
It is great to be here.
Now, before we even get started, I want to take a second to connect with you. I have a question, and I want you to be honest with yourself. I want you to visualize this moment. It is late at night, maybe it is 2 in the morning. You are sitting in your chair, the room is dark, and the only light is coming from, the blue glow of your computer screens.
The lonely hour.
Exactly, the lonely hour. And you look at your browser. You have 15 tabs open.
Oh, yeah.
You have a YouTube video playing from a guy promising you can make $1 million in a month. You have a PDF open about Fibonacci retracements.
Right.
You have a Discord server pinging every 2 seconds on your phone. You feel like you have read every single trading book in the library.
Every single one.
You feel like you have watched every tutorial on the internet. You know the definition of every indicator, RSI, MED, Bollinger Bands. You know them all.
You are a walking encyclopedia of trading terms.
Right. You are smart. You are dedicated. But then you click over to your broker account. You look at your balance, and it is red. Or maybe, if you are lucky, it is just flat. You are breaking even. You are working so hard, studying so much, but you are still losing money. Do you know that feeling?
It is a very common feeling.
Yeah.
It is a painful feeling. You feel stuck.
Exactly. You feel completely stuck. You feel like you are running on a treadmill at maximum speed, sweating, heart pounding, but you are not moving forward a single inch.
Nothing.
It is frustrating. Honestly, it's heartbreaking for a lot of people.
It is the tragedy of the modern trader. It really is.
So before we unpack why that is happening, and believe me, we are going to get to the bottom of it today, I want to ask you a favor. I want to ask you to please support this channel with your whole sincere heart. If you enjoy these deep dives, if they help you, please hit that like button, share this deep dive with a friend who is struggling, and subscribe to the channel. It really helps us keep the lights on and keep bringing you these insights. We appreciate you so much.
Absolutely. We cannot do this without you.
Okay, let's get into it. Today, we are on a mission. We are diving into some incredible insights that have been circulating recently, specifically touching on why most traders never escape that beginner phase.
Right, the plateau.
We are looking at source material that argues the problem is not what you think it is. It isn't your intelligence. You are plenty smart.
Not at all.
And it isn't the market. The market is not rigged against you personally.
No, it rarely is.
Yeah.
The market does not even know you exist.
Exactly. The problem is a psychological trap. And to help me break this down, I am joined by our resident expert. I'm going to call you Jack for today.
Sounds good.
Jack, you are a veteran trader. You have been in this game for a long time. You have seen the floors, you have seen the screens, and you specialize in fixing broken trading plans. Welcome to the show.
Thank you, Handsome Trader. It is a genuine pleasure to be here. Listening to your introduction, I was just nodding my head. I have seen this story play out thousands of times. It is the most common tragedy in finance.
It really feels like a tragedy. We have the source material today that paints a very specific picture. It talks about a trader who was stuck for 3 full years. 3 years, imagine that.
3 years of pain.
3 years of waking up early, staring at charts, losing money, blowing small accounts, and starting over.
It's exhausting just hearing it.
And the crazy part is, throughout those 3 years, they thought the solution was to learn more.
That is the instinct. That's what we're all taught.
But the premise we are exploring today is that learning more might actually be the problem. That sounds counterintuitive, doesn't it?
It is a fascinating paradox. Think about how we are raised. Think about the entire school system.
Right.
From the time we are 5 years old, we are taught a specific logic. If you do not understand something, you study more. You acquire more information.
Our books.
Exactly. If you get a C in math class, what do? You read the textbook again, you hire a tutor, you memorize more formulas.
Right. Effort equals results. Knowledge equals power. That's what they drill into you.
Exactly. In the academic world and, in most careers, the more you know, the better you perform. If you are a doctor, you need to know every bone in the body.
Of course.
But in trading, that impulse, that desire to learn more, can actually trap you. It creates a state of mind that we call permanent exploration mode.
Permanent exploration mode. I love that term, but I also hate it because it sounds exhausting.
It is.
It sounds like being lost in the woods forever.
Let's unpack this. What exactly is this mode? Because the listener right now might be thinking, well, Jack, I am not a beginner. I know what a candlestick is. I know what support and resistance are. I am not exploring. I am trying to win.
And that is exactly where the trap springs. That is the deception.
See, the listener isn't a rookie. They aren't asking what is a stock. They know the mechanics. They know how to click buy and sell.
They've got the basics down.
They've got the basics down, but they are trapped in a behavioral loop. The source material describes it perfectly. Let's walk through the life of a trader in this mode.
Okay, let's role play this. Walk me through the cycle.
All right. Imagine you start on a Monday. You have a strategy. Maybe you found it on YouTube. It is a trend-following strategy. You are excited. You feel good.
I am ready to make money. I am ready to quit my job this Friday.
Exactly. So you take a trade and you lose. Okay, no big deal. It happens.
Right, part of the game.
You take another trade on Tuesday. You lose again. Now you're getting a little annoyed.
Okay, yeah. My confidence is shaking a bit.
You take a third trade on Wednesday. The market chops around. It looks like it is going to go up, and then boom, it drops and hits your stop loss. 3 losses in a row.
Ouch. Okay, so now I am angry. I'm looking at my screen and I am thinking, this strategy is garbage.
Right. That is the immediate reaction. You blame the tool.
100%.
You say, this strategy is broken, or the market conditions have changed, or my personal favorite, the market makers are hunting my stop loss.
Oh, they're out to get me personally.
They are. So what is your solution? What do you do on Thursday?
I go looking for a new strategy. Obviously, this one clearly doesn't work.
Precisely. You go back to Google, you go back to Twitter, you find a new approach.
Yep.
Maybe this time you try a mean reversion strategy.
Yep.
Or you buy a new indicator that promises 90% accuracy.
Right. The shiny new toy.
You learn it, you get that rush of excitement again, and you think, this is the secret I was missing.
It feels like falling in love. The new strategy is perfect. It has no flaws.
It is the honeymoon phase. So you test it. You trade it for, say, 20 trades.
20 trades feels like a lot when you are losing.
It feels like a lifetime to a struggling trader.
Yeah.
But mathematically, it is nothing.
Just a drop in the bucket.
But you test it for 20 or 30 trades. Then, inevitably, what happens? It stops working for a moment. You hit a snag. You have a losing week. So what do?
I switch again. Back to YouTube I go.
You switch again, and then again. And the source material argues that every time you switch, you are hitting the reset button.
The reset button. That is scary.
Think about it like building a house. You pour the concrete foundation. It is wet. You have to wait for it to dry.
Okay.
But after 2 days, you look at it and say, I don't like this shape. So you jackhammer it up. You destroy the foundation.
Oh, man.
Then you move 10 feet to the left and dig a new hole. You pour new concrete. 3 days later, you change your mind again.
So after 3 years, what do you have?
You have a field full of shallow holes and wet concrete. You have no house.
Nothing.
You have no shelter. You are constantly going back to zero. You are sabotaging your own development because you are never allowing yourself to get past the amateur stage with any single method.
Wow.
You are a perpetual beginner at 10 different things instead of a master of one.
That is a painful image. Tearing down the house every time it rains. It explains so much about why people feel exhausted.
It's pure exhaustion.
They are working hard. They are digging holes, but they are not building anything vertical.
Exactly. Nothing sustainable.
This connects to something the source brought up about the illusion of the better strategy. I think we are all guilty of this.
Absolutely.
We have this deep-seated belief that there is a secret setup out there, a supernatural answer, as the source calls it.
The Holy Grail.
Yes, the Holy Grail. We think if we just search long enough, if we just scroll through enough Twitter threads, we will find the strategy that never loses.
Right.
The one that prints money while we sleep. But you are saying that is a myth.
It is the most dangerous myth in trading. It is the lie that keeps you poor. Here is the reality, and the source material is very firm on this, and I agree with it 100%. A better strategy might exist, sure.
Okay.
Maybe there is a strategy out there that performs 5% better than what you are doing now. Maybe, but it doesn't matter.
Wait, hold on. How can it not matter? Everybody wants to make more money. If there is a better strategy, shouldn't I find it?
No, because a strategy only needs to be profitable, not perfect.
Profitable, not perfect.
If you have a system that makes money over the long run, your job is to execute it with discipline. The source makes a profound point here. The answer to trading success is boring.
boring.
It is simple. It is not sexy.
Yeah.
Discipline with one imperfect strategy is vastly superior to searching for a perfect one.
So we are chasing a ghost while the real money is sitting right in front of us, just waiting for us to be consistent.
Precisely. You are digging for gold in 10 different shallow holes, getting bored after 5 feet and moving on.
Yeah.
Meanwhile, the successful trader is the one who picked one spot and dug down 500 feet. That is where the gold is.
That brings us to the second segment of this discussion, which is the addiction itself. The source calls it a learning addiction. And this hit me hard because I think I am guilty of this in other parts of my life. The source describes a typical trader's screen. Let's paint the picture.
Okay. Imagine the command center.
The command center, I love it.
You have 3 monitors, maybe 4.
Yeah.
On the left screen, you have CNBC playing, talking about interest rates.
Right. Got to stay informed.
On the right screen, you have 3 different Discord servers open with thousands of messages scrolling by.
Ping, ping, ping.
You have 15 browser tabs, Open Investopedia, Trading Economics, Twitter, YouTube.
Yeah.
You are following 20 different influencers who all have different opinions.
It looks impressive. If my mom walked in, she would say, wow, my son is a Wall Street genius.
It looks very professional. It looks like hard work.
It feels productive. It feels like I am doing research.
But the source argues, and this is the hard truth, that this is not progress.
Okay.
It is actually procrastination. It is a very sophisticated, very expensive form of avoidance.
Avoidance of what?
Avoidance of the scary work, avoidance of execution. See, learning gives you a dopamine hit. It is a chemical reaction in your brain. When you watch a video about a new indicator, your brain says, I found a solution. I am getting smarter. This is the missing piece. You feel good.
Right. I feel safe.
You feel safe. You feel like you are achieving something.
But placing a trade?
Yeah.
That feels different.
Completely different. Executing a trade, putting your hard-earned money at risk, that is terrifying.
It's real.
That is uncertain. The market might take your money. You might be wrong. That hurts. So, to avoid the pain of potential loss, we retreat into the safety of learning.
Wow.
We hide in the books because the market is too scary.
That is deep. So we are essentially hiding in the library because we are afraid to go out onto the playing field.
We are reading books about football. We are memorizing the stats of every player. We know the physics of how a ball spirals.
Right.
But we refuse to put on the cleats and actually kick the ball. And you cannot become a football player by reading books. You have to get on the field and get tackled.
You've got to feel the pain.
You have to feel it.
The source makes a great comparison here between the generalist and the specialist.
Yep.
I think this distinction is crucial for our listeners.
It is vital.
Let's unpack that distinction. Who is the generalist in this scenario?
The generalist is the listener right now who is nodding their head. The generalist is the person who knows a little bit about everything.
Okay.
They can explain trend lines. They know what the RSI divergence is. They know what a butterfly pattern looks like. They know the difference between a simple moving average and an exponential moving average.
They sound smart at a party.
They have a very broad vocabulary. They can talk the talk, but they make no money.
They have all the tools, but they can't build the house. And the specialist.
The specialist is the pro.
Yeah.
The specialist might be technically dumber than the generalist. The specialist might not know anything about crypto if they trade Forex. They might not know anything about fundamental analysis if they're a technical scalper. They might not know what the Federal Reserve did yesterday.
They're in their own little world.
But they know one thing inside and out. They know their specific setup so well they can see it in their sleep.
They are a sniper.
Exactly. In trading, the specialist wins. The generalist stays stuck.
Wow.
The market does not pay you for knowing definitions. The market pays you for executing a specific edge over and over and over again.
The source puts a timeline on this that I found really interesting. It suggests the learning phase should take a maximum of 1 year.
1 year. That is the cutoff.
That is a tough pill to swallow for some people. If you have been trading for 3 years and you are still watching introduction to price action videos, or you are still searching for best strategy for beginners, you are in a trap.
Yes. If you are past that 1 year mark, you have enough information. Trust me.
You do.
You do not need more inputs. You do not need another book.
Yeah.
You need more output. You need execution. And this leads us to the mathematical reason why people quit, which I think is where it gets really interesting for the analytical minds out there.
Yes, let's talk about the math. Because I think our emotions lie to us constantly, but the math doesn't lie.
The numbers don't lie.
The numbers are the numbers. The source talks about the 20 trade fallacy.
The 20 trade fallacy.
I mentioned earlier that 20 trades feels like a lot. If I take 20 trades and I lose 12 of them, I feel like a failure.
Right.
I feel like my account is bleeding. But you are saying that sample size is statistically insignificant.
Completely insignificant. It is noise. Let me give you an analogy. Think about flipping a coin.
Okay.
We know a coin is 50-50, right? Heads or tails. It is a fair game.
Right.
But if you flip a coin 20 times, is it guaranteed to be exactly 10 heads and 10 tails?
No. You could easily get a run of heads or tails.
Exactly. You could get 15 heads and 5 tails. Or, and this is important, you could get 5 tails in a row. Now, imagine you didn't know how a coin worked. Imagine you thought the coin was a trading strategy, and you flipped it, and you got 5 tails in a row. What would you scream?
I would scream, this coin is broken, this is a bad coin, I need a new coin.
That is exactly what we do with strategies. We take 5 losses in a row, and we say the system is broken. But it isn't broken. It is just probability doing its thing.
It is just a bad run.
It's just a bad run. The source explains this concept of variance. Listeners need to understand this word. Variance.
Okay, variance.
Even the best setups in the world, we're talking about the strategies used by hedge funds, by the elite traders in New York and London, they lose 40% to 50% of the time.
Let that sink in for a second. The best traders in the world, the guys with the yachts, are losing almost half the time.
Yes, and they are wildly profitable because their wins are bigger than their losses.
Right, the risk reward.
But here is the tragedy. A beginner hits that normal patch of losses, that normal variance, and they panic.
The panic point.
The panic point. When they hit 5 losses in a row, they don't think, oh, this is variance. They think, I am failing.
I'm a bad trader.
I'm a bad trader. This system is bad.
Yeah.
So they quit. And the heartbreaking part, according to the source, is that they often quit right before the strategy was about to turn profitable again.
They walk away 5 minutes before the miracle happens.
Exactly. They abandon a very good strategy because they judged it based on a tiny, statistically irrelevant sample size.
Wow.
They never let the law of large numbers work in their favor. You have to stay in the game long enough for the math to play out.
This connects to expectations versus reality. The source mentions that beginners are obsessed with an 80% win rate.
Oh, yeah.
They want to win 8 or 9 times out of 10. They want that feeling of always being right.
And that expectation is a delusion. It is a fantasy sold by marketers who want to sell you a $2,000 course.
Right.
The source states clearly, you can build a literal fortune with a 50% to 60% win rate. If you win 60% of the time, you are a superstar.
Well,
you are a legend.
60% makes you a legend.
Yes.
Yes.
But because beginners don't believe this, they chase the impossible 80%. They throw away a perfectly good 55% strategy because it isn't an 80% strategy.
Then what happens?
And by chasing the 80%, they end up with 0%.
It is like trying to date a supermodel who doesn't exist while ignoring the wonderful partner right next to you who could build a great life with you.
That is a surprisingly accurate analogy, handsome trader. You are chasing perfection and ending up alone. Or, in this case, you end up broke.
So we have diagnosed the problem. We are stuck in exploration mode. We are addicted to the dopamine of learning, and we don't understand the math of variance. So what is the solution?
Okay, the cure.
The source gives us a very specific prescription. It is almost like a doctor's order. And honestly, when I read this, I thought, this sounds painful.
It is a strict prescription. It is not fun. The rule is pick one setup.
One.
Just one, and commit to it for 6 months.
6 months, no switching, no trying new things on the side.
No switching, no side hustles with other strategies. And the criteria is, do not evaluate if it works. Do not judge it until you hit 100 trades minimum.
100 trades. I have to play devil's advocate here. I am the listener. I'm sitting in my car or on the train, and I am thinking 100 trades. That could take me 3 or 4 months. What if I pick the wrong strategy? What if I spend 4 months trading a garbage strategy? Isn't that a huge waste of time?
That is the fear talking. And it is a valid question. Think about the alternative.
Okay.
You have already spent 3 years jumping around. You have already wasted 36 months. Isn't that a bigger waste of time?
Touché.
Even if you pick a mediocre strategy, executing it perfectly for 100 trades teaches you discipline. It teaches you execution skills.
Right.
The source argues that a bad strategy executed perfectly is better for your development than a perfect strategy executed poorly. You need to build the muscle of commitment.
So the goal isn't even necessarily to make $1 million in those first 100 trades. The goal is to prove you can actually follow instructions, your own instructions.
Precisely. You are training yourself to be a robot. You are trying to move from knowledge, which is knowing the definition of a trend line, to skill, which is seeing the trend line without thinking.
Why is that distinction between knowledge and skill so important? I feel like we use those words interchangeably, but in this context, they are opposite.
They are very different. Knowledge is what the listener has right now. It is definitions, terminology, theory.
What you read in a book.
It is what you get from a book. Skill is what you get from repetition. Skill is intuition.
The source used a beautiful analogy here. It said, when you trade one setup for long enough, it becomes like a limb of your body.
Yes. Think about walking, or think about driving a car. When you first learned to drive, do you remember how hard it was?
Oh, yeah. I was thinking, hands at 10 and 2, check the mirror, use the blinker. How hard do I press the gas? It was overwhelming.
Exactly. You were using knowledge. You were thinking about every single step. But now,
I just drive.
you drive home from work and you don't even remember the trip. You just do it.
Right.
The car is an extension of your body. That is where you need to get with trading. You stop thinking about the chart and you start feeling the market. But you cannot develop that feeling if you are changing the car you drive every single week.
You can't get muscle memory if you're playing a different sport every day.
Exactly. You don't get good at basketball by playing baseball on Tuesday and soccer on Wednesday. You get good by shooting free throws until your arm falls off. That is what this 100-trade commitment is. It is shooting free throws.
Now, I want to manage expectations here, because the source gives us a roadmap of emotions. If the listener decides, okay, handsome trader, Jack, I'm in. I'm going to do the 100 trades. It is not going to be rainbows and sunshine, is it?
Out at all.
It is not going to be easy.
No. And it is important to be honest about this. The source warns us about the emotional cycle. Phase 1 is excitement.
Okay.
The first few weeks feel great. You have a plan, you feel disciplined, you printed out your rules, you feel like a professional.
It is like the first week of a diet. I love salad. Salad is great. I am going to be skinny.
Exactly. But then comes phase 2, boredom. And the expert note here is crucial. Boredom is good.
Why is boredom good? We hate boredom. We want action. We want excitement.
Boredom means you are doing the same thing over and over again. It means you are stabilizing.
Okay.
Boredom means consistency. But the trader hates it. They want the thrill of the casino. So when they get bored, they start looking around. And that leads to phase 3, the crisis. The crisis. This sounds dramatic. What happens in the crisis?
It feels dramatic. You will hit a losing streak. It is guaranteed.
It's inevitable.
It's inevitable. And right when you are losing and right when you are bored, you will open social media. You will look at Twitter or Instagram, and you will see some guy posting a 500% gain on a meme coin. Or you will see a screenshot of someone making $10,000 in 1 minute using a strategy you aren't using.
Oh, the FOMO, the fear of missing out. It hurts physically. It feels like a punch in the gut.
It does. You will think, I am sitting here trading this boring breakout strategy for pennies, and this guy is getting rich.
Yeah. What am I doing with my life?
This is the danger zone. This is where most traders break. They abandon the 100-trade plan and go back to exploration mode.
But if they push through, if they strap themselves to the mast and survive the storm.
Then comes phase 4, the breakthrough. It usually happens around month 3 or month 6. You develop pattern recognition.
You start seeing the setup before it even happens. You know which trades to skip, even if they technically meet the rules, because something just looks off.
That's the feel.
That intuition, that cannot be taught in a book. It is earned.
Earned intuition. I love that. It reminds me of the story the speaker shared in the source material. He gave a personal case study.
Right.
He calls it his boomer setup.
I laughed at that, the boomer setup.
Tell us about the boomer setup. What was he trading?
Well, the speaker chose a simple breakout with momentum. Nothing fancy, no secret algorithms.
Okay.
He basically looked for a chart where the price was hitting a ceiling, a resistance level, multiple times. Bam, bam, bam. And then when it finally broke through that ceiling with speed, he would buy.
That is the oldest strategy in the book. My grandpa probably traded that.
It is ancient. He admitted it seemed funny and outdated compared to the complex stuff people do on Twitter with heat maps and order flow.
But he committed to it.
He did. He made a deal with himself. 6 months. One setup. No switching. And the timeline he shared is so realistic. Month 1, he lost money. Ouch. He was red. He wanted to quit. Every fiber of his being screamed, switch, this is stupid.
But he stayed.
He stayed. Month 2, break even. Not losing, but not winning. He was just treading water.
Just grinding.
Just grinding. Month 3, a small profit. Just a little bit. And by month 6, he was consistently profitable.
And the interesting stat here was his win rate. It went from 50% to 60%.
That doesn't sound like a huge jump to a layman. People hear 50 to 60 and think, so what?
Right, only 10%.
But in trading, moving from 50% to 60% is the difference between struggling to pay rent and being a professional. It is massive.
Wow.
And the lesson he drew from this was profound. The magic wasn't in the breakout setup. The breakout setup is as old as the hills. The magic was in the commitment.
Because he committed, he understood the nuances, he knew when to hold and when to fold.
Exactly. He stopped guessing and started knowing. He built that relationship with the strategy. It became his limb.
So let's get practical. We have listeners who are fired up. They want to stop being eternal beginners. They want to build that house. What do they need to do right now, step by step?
Okay, let's break it down into 5 steps based on the source. Step 1 is the hardest. Stop consuming.
Cold turkey.
Cold turkey. Close the tabs. Unsubscribe from the gurus for a while. Stop watching the how to get rich videos.
Yeah.
You already know enough. You know support, resistance, stop loss. Everything else is just noise right now. Silence the noise.
Okay, step 1, silence the noise. Step 2.
Step 2, pick one setup. It does not need to be perfect. It just needs to be logical. A breakout, a pullback to a moving average, a crossover. Just pick one.
Just pick one. Don't overthink it. Step 3.
Step 3, write down the exact rules. And when I say exact, I mean a robot could follow them.
No wiggle room.
No wiggle room. You need to write, if price closes above the 50-day moving average, I buy. I put my stop loss at the low of the candle. I take profit at 2 times my risk. Simple, clear, no ambiguity, no I buy if it looks good, no rules.
Step 4 is the execution.
Step 4, execute for 100 trades. Track and journal every single one. You need a spreadsheet, date, entry price, exit price, result.
Gotta have the data.
If you don't journal it, it didn't happen. You need the data. You need to see the truth.
And step 5.
Step 5 is mental.
Yeah.
Accept the boredom. Embrace the suck. Know that it is going to be boring and know that is where the growth is happening. When you are bored, you are winning.
I think there is a huge confidence shift that happens here too.
Huge. When you have a spreadsheet of 100 trades that you executed yourself, you stop second guessing.
Yeah.
You stop needing validation from a guru. Confidence doesn't come from someone telling you can do it. Confidence comes from looking at your own data and saying, hey, I did this. I followed the plan. It works. You trust your process because you built it.
That is powerful. It is about taking ownership. It is about growing up, in a way.
It is.
Moving from the child who needs a teacher to tell them what to do to the adult who does the work.
That is the perfect way to put it. It is maturing as a trader. It is graduating.
So, to summarize what we have discussed today, we need to escape the beginner phase by moving from learning to doing.
Yes.
We need to stop being generalists who know a little about everything and become specialists who master one boring thing.
Correct. The market rewards mastery. It punishes dabbling. And most of us have been dabbling for too long.
I want to leave you with a final thought from the source material, and it is a bit of a challenge. The choice is actually very simple. You can stay stuck in exploration mode forever. You can feel smart. You can win arguments on Twitter about indicators. You can look like a genius at parties, but you will keep losing money. Or you can commit to one boring thing for 6 months.
Yeah.
You can suffer through the boredom, suffer through the FOMO, and finally become a trader.
It is not an easy choice, but it is the only choice that leads to success.
Absolutely. Now, before we sign off, I need to read our mandatory disclaimer. Please listen closely because this is important.
Very important.
Content in this video is for knowledge sharing and personal experience only. It is not investment advice. Financial investment always carries risks. Viewers need to research carefully and take responsibility for all their own decisions. We are just 2 guys analyzing a source. We are not your financial advisors.
Always do your own due diligence. Protect your capital.
Exactly. I want to say a huge thank you to the Handsome Trader community. You guys are the best. Please, if you found value in this, if this woke you up a little bit, hit that like button, share this with your trading buddy, and subscribe.
It was a pleasure unpacking this with you. It's such a vital topic.
Thanks for being here. And to our listeners, stop learning, start committing. We will see you on the next deep dive. Goodbye.
Bye.